Hello and thank you for joining me on my channel, The Naked Property with Oseye Cohen. Today we're going to talk about the 3 reasons why Canada might see the real estate market bust in 2021. I know, people don't really want to talk about this, but I'm going to go there. It seems to be like a taboo where Canadians, nothing like this happens in Canadian real estate. Everything is so monitored and controlled by CMHC and the central banks, which it is. I'm not going to disagree with that. However, there are problems and we need to address them. This is the purpose of this channel, actually. The Naked Property with Oseye Cohen. What we're here to talk about is the ugly side of real estate investing. Everywhere you turn, you learn about how, I flipped, I did this, I made so much money, whatever in real estate. And yes, people are making a lot of money in real estate, in the good economy as well as the bad. Except, you know what, no one really talks about the ugly side. So I'm gonna get naked with you here, okay? I'm gonna talk about the truth. We're gonna talk about numbers. We're gonna talk about how to calculate numbers. We're gonna talk about the trends. We're going to talk about cost of construction and renovations. We're going to talk about mortgage rates and how when there's big changes by the central bank, how it affects you as an investor buying the home and what happens in between. There's so many things. Dealing with tenants, evictions, going to the tribunal, all the good stuff that nobody really likes to talk about. The things that people avoid talking about or wanting to, the reason why they don't want to invest in real estate, because of the hassles. I'm gonna get truthful about the actual hassles that are real when it comes to real estate investing. So, welcome to my channel. To give you a little bit of background about me, my name again is Oseye Cohen, and I am I'm a real property administrator. So basically, what I do is I do property management and administration services for real estate investors, and I also work with independent contractors. So I have a whole network of people that I work with within the industry, and together we're able to solve many problems that are real when it comes to investing in real estate. So over time, I'll also give you more background about me and what I do. But today, let's get back to the topic. I really want to talk about this because I do believe that Canada is going to see our market bust. The bubble is going to bust in 2021. I've been predicting this for many years. In the past, I used to be a mortgage specialist. I used to be an agent, and I specialized in working with hard to close clients. So people who just trying to get their first mortgage, get their first home, whatever, and they had many challenges closing. So that's who I zeroed in on. I was helping those people, and I loved it. It was a challenge, mind you, but I loved it. I loved it when there was a success story, they got to move in, and that was the part that brought me great joy. However, there's also the ugly side. What happens when that homeowner, they struggled to get in there, or they used creative financing to get in there and they really couldn't hold their own. The values didn't add up, and then guess what? Short time later, they're going through power of sale or foreclosure in the US. So these are the realities of this game, and I'm here to show you the good, the bad, and the ugly. Okay, so what I've been seeing, I kind of digressed, but is that the real estate bubble is going to burst. And yes, there is a bubble in Canada, and yes, it's going to burst. We've been blessed, actually. We've been very blessed over the years. When the U.S. went through, like 2007, 2008, when the U.S. went through their breakdown, yes, it affected us here. We had a breakdown too, but nothing like over there. Nothing like the US. So we can consider ourselves very blessed. Our markets went up and down, like slightly, But overall, the cost of the appreciation rate for our real estate has been progressively going up fairly steady. We didn't have much of a setback to the extent the way the US have. So, but guess what? It's all catching up with us now. Okay, and there are three real reasons why I believe that it's going to bust in 2021, so just next year. Reason number one, are you ready for this? I'm going to have to actually sit down and break some things down with you too, but let's get into this, okay? Okay, here it is. Reason number one. The mortgage delinquency rates in Canada are rising. It's been happening. So, delinquency rates, lenders don't like to talk about this. This is the area that is just, okay, yes, we have some on our books where we had to put into power of sale, but let's not talk about that. Let's talk about everything else. So we're going to talk about that. Percentages seem kind of low, but when you put everything into the big picture, the big perspective of it all, it's significant. And the fact that it's rising. Now the key thing to understand too, delinquency rates are rising, and it's been happening even before we reached 2020. So we can't even blame COVID for some of these trends. Okay, it's been happening even before that, and now with COVID, it's now even bigger. Okay, but the trend has been already happening, and we need to understand this.
Now, the first thing you're going to need to understand is that there are 4 different types of lenders in Canada that were carrying the outstanding mortgages in 2019. The first are banks, with a market share of 72%, accounting for 0.24% of the delinquency rates. The second are credit unions, with a market share of 14%, and they account for 0.17% of the delinquency rates. The third are mortgage financing companies with a market share of 9%, and they account for 0.24% of the delinquency rate. And the fourth are mortgage investment corporations, or MICs, and they have a market share of only 1%, but they account for 1.73% of the delinquency rate. So what is a mortgage investment corporation? Well, they are unregulated lenders or mortgage investment entities and other incorporated mortgage financing businesses that pull money from investors. In 1973, the federal government passed laws enabling the creation of MICs to increase the flow of mortgage funds and to provide a channel for small investors to participate more directly in housing finance markets through private lending. They must invest at least 50% of the assets in residential mortgage loans, cash, and insured deposits. The remaining assets can be invested in commercial or industrial properties, developments, or other assets. These alternative lenders typically provide short-term mortgages at higher fees and interest rates to borrowers who have difficulty qualifying for loans from more stringent regulated lenders. These borrowers often include self-employed individuals, business entrepreneurs, real estate investors with more than one property, and borrowers with short-term cash needs due to bruised credit, divorce, health issues, and whatever the case may be. The distinct characteristics of an MIC loan reflect the riskier profiles of their clientele. While this function supports some stability in the markets by providing alternatives to borrowers, it also has the potential to introduce additional vulnerabilities into the housing finance system. MICs showed slightly riskier profile and higher investor yields in 2019. So in 2019, MICs held approximately between $14 billion and $15 billion in mortgage debt, which represents 1% in nationwide outstanding mortgages, a similar share as in 2018. Delinquencies of 30 days or more and foreclosures rose, suggesting more borrowers are struggling to make their payments, and MICs have an increased risk of losses. So, add the events in 2020 to the existing issues in private lending prior to 2019, and you will see that we are facing additional challenges down the road.
Okay, so the second reason is tenant evictions. Tenant evictions are on the rise. Now, this is an area that has many people concerned, in uproar, and I guess they're pointing their fingers at Bill 184. Now, Bill 184, it depends on what side of the fence you're sitting on to say if it's good or if it's bad. But at the same time, it means well. The bill means well. And it's let me explain what it is first of all. Okay, so let's take a look. Let's see what Bill 184 is about and what could happen and what is happening.
It's a bill promising greater protection from unfair landlords. Bill 184 would see changes to the Ontario Residential Tenancies Act in hopes of putting an end to unlawful evictions.
People in the industry, we've been thinking for a while that this is a long time coming, or at least aspects of the bill.
The province says the bill would help with rent evictions and would include doubling the maximum fines for offences under the RTA to $50,000 for an individual and from $100,000 to $250,000 for a corporation. The act would also require landlords to offer tenants a chance to move back in for the same price if they were evicted for repairs. And if tenants were evicted in bad faith, landlords would be forced to pay the tenants up to 2 years' rent as compensation.
At least what this does, and one of the more important aspects, is it creates not only a further financial incentive not to do that, and perhaps other legal incentives not to do that, but it also boosts up the compensation to the tenants.
The bill would also require landlords evicting tenants from a unit they intend to use themselves to report to the Landlord and Tenant Board if they have done so previously within the past 2 years. Legislation would also streamline Landlord and Tenant Board processes and allow access to alternative dispute resolutions instead of a formal hearing.
We're not taking away people's right to evict tenants, just in bad faith.
The organization Keep Your Rent Toronto has been advocating for tenant rights throughout this pandemic, says the bill will limit legal defenses and in some cases remove the requirement to hold eviction hearings. They also tweeted today, repayment plans will leave us saddled with debt and more at risk for evictions in the future. This bill does not affect the current eviction moratorium. While the Ford government says this bill will protect tenants, the opposition says the bill is just a band-aid solution that will do more harm than good.
Who are not able to afford their homes because this government never gave direct support to tenants, to small business owners, which frankly would have helped landlords. None of that was done at the beginning of this pandemic. The NDP official opposition put forth a proposal that would have saved many, if not all, of our small businesses across the province from the bleak realities that they are now facing, even with the reopening strategy. We see at residential levels tenants who consistently get eviction notices time after time after time. In St. Paul's alone, we have 67.8% of folks who are renters. You know, we already know that this government has not given support to the municipalities in the way in which we need it. We know that Toronto itself is swimming in a $1.5 billion deficit, and I have learned as an MPP, of course, that municipalities are allowed to operate in deficit. So what that means is if this government continues to be opaque and not transparent and not share with our municipalities what kinds of supports they're going to have, it's just going to mean more devastation, because we're going to have less access to supportive housing, less access to affordable housing, less access to childcare subsidized spots, less access to a public transportation that runs and support for schools. All of this is happening on this government's watch. The government consistently says that we are overheated. Let's go, for goodness sakes. Nothing substantial. But forget about what I have to say. Let's go straight to the Ontarians. Let's go straight to my constituents. Here's Patrick. He's speaking on behalf of the 100 Vaughan Road Tenants Association, which represents 28 tenants living in a 33-unit building in our riding. Quote unquote, today I would like to voice our association's concerns with Bill 184. Our membership is deeply and unequivocally opposed to this bill, and we're particularly alarmed that it is moving forward during a pandemic. On March 26th, in response to Ontario's COVID-19 outbreak, Premier told tenants, if you can't pay rent and you're absolutely in crisis, then you don't have to pay rent. At the same press release, he also said that if anyone had to choose between putting food on their table or paying rent, that the government of Ontario will make sure that no one gets evicted. Adding, we're going to make sure we take care of these people. For goodness sakes, on August 1st, when the emergency measures and the extension on evictions is ripped away, we are going to see a mass exodus of folks being made homeless because this government never gave Ontarians, they never gave my residents, they never gave our constituents support at the beginning. For goodness sakes, this is not about whether you're NDP or Conservative or Liberal or Green. Someone on the government side said that. I absolutely believe. I completely agree. But this is about listening to what Ontarians are saying, what they're begging for. I go back. While we have several concerns with this bill, quoting Patrick, our association wishes to highlight one provision in particular. Under Bill 184, tenants who agree to a rent repayment plan will lose their right to an eviction hearing in the future if they miss a single installment for whatever reason, such as, maybe a job loss or something like that, but I mean, who's counting during a pandemic? Their landlord will be able to evict them without a hearing, regardless of the circumstance. Imagine a single parent who, prior to the pandemic, worked full-time as a bartender and who lives in a rental housing. During the pandemic, this tenant has lost their sole source of income. In the months since, they have struggled to find new work, and without access to childcare during the pandemic, since there's no childcare or education plan come fall, they have had few opportunities to do so. Despite federal benefits, they remain unable to balance other critical expenses with rent. Following the enactment of Bill 184, the landlord applies for an eviction. At this point, the tenant is back to working full-time. However, they owe a substantial amount of back rent. To avoid eviction, the tenant agrees a rent repayment plan with their landlord. What happens if they miss that payment plan? They could potentially be on the streets.
The third reason why the market might burst in Canada in 2021 is because the mortgage deferral programs have come to an end. Now what's going to happen? So yes, the big banks have been doing a great job in giving incentives and programs. Actually, let me show you. Let me show you a few of the programs that have been taking place and what's been available. So there you have it. 3 reasons, pretty good reasons if you ask me, why it's going to bust in 2021, while the real estate market is going to bust in Canada in 2021. As I said, we've been blessed over the many years. We've been seeing some dips, but nothing. I mean, house prices have been appreciating like crazy. And this is the thing. This is why it's like a bittersweet scenario, that when you're investing in real estate, the amount of profit you can make in appreciation over a fairly short period of time is pretty significant compared to certain investments in the US, for example. So we have been blessed. But guess what? This gravy train is about to end with this bust. I just wanted to let you know. It's not to say don't continue to invest in real estate, but we just need to be conscious and mindful as to where we're at in the cycle, and the fact that it all has to be balanced out. There is no up without down. There is no good without bad. We are going to see, you have to see, it's a universal law. You have to see the good with the ugly and the ugly with the good. So we've been riding on the good, folks, and now it's time to take a look at the ugly side. So it's really our responsibility to be aware, to be conscious, and understand where we're at and understand how to function in this market. So that's what this channel is all about. If you disagree with me, or if you have other comments or anything to add, I really, really want you to share with me. It's important we keep this dialogue going. As I said, I'm about unveiling the truth, the ugliness behind real estate investing. I have many stories to share with you along the way, and we'll get into that. But I definitely want to hear from you. So leave your comments below. Ask me any question. Things I don't know, I definitely will be researching or getting some help from my friends that are also in this industry, and we'll be able to answer all your questions. So yeah, leave a comment. Tell me what you think, or if there's other reasons, other big reasons that I might have left off. I will continue this dialogue. Let's continue the conversation. Share this with your friends, other investors, if you are a real estate investor or investing in mortgages perhaps. And also, if you're an independent contractor in the trades, this channel is for you. Okay? So do meet me back here again. I am committed to posting videos on a daily basis. I just want to keep everyone up to date as to what's going on. Again, continue to connect with me. My contact information is below. Definitely check it out. Do subscribe and check the bell notification, so when the next time I do upload a video, you'll be the first to know. So I'll see you again tomorrow. Keep safe, and blessings. All the best in all your investment ventures. Thank you.